Hello traders, Gary Wagner here. Approximately 9:30 a.m. in Honolulu, 3:30 in New York City. It is Friday, finally, the 13th day, Friday the 13th that is, of July 2012, and this is the daily report for gold and silver, our weekend review. Nice, strong finish on the market today. We still have a little bit of trading, but I believe it will close in this area. It's been trading in double digits. I'm speaking about gold as well as silver throughout the evening. A couple of stories we'll talk about in a second. Currently, we have gold trading up about $17, $18 on the day. As you can see, just approaching $10 shy or so of that elusive $1,600 mark, up about 1.10%. High today is going to be $15.98. No brass ring, but it has come close. That's a critical area. We'll talk about that also on today's report. And silver continuing to show very, very strong moves to the upside, up about 12 cents today, 0.44% higher with a low of 27.09 and a high of 27.70. Traders, we are looking at a 60-minute, very short-term Heikin Ashi Japanese average chart. This is continuous contract of COMEX Gold. Yesterday, we pointed out the fact that we actually did see a nice pivot point or V-shaped reversal in the market. Of course, we entered a long position a little bit before that. I believe that we're in roughly between 1578 and 1581, depending on where you got in, because we did talk about buying the dip that evening. And we took a little bit of pressure, obviously, as this market came down. But now it is higher than our initial entry price. I feel a lot more comfortable as we go into the weekend. Of course, we saw the market consolidate for a little bit. And you can see really on these Heikin Ashi short-term charts that we had a clear, defined rally. And that rally has really two components to it. According to reports today, China's economy continues to slow down. This has led to the possibility, the potential, that there would be some sort of monetary easing and some sort of stimulus on the part of the Chinese government. What that means is not only do gold bulls have the USA and Europe to look at for potential monetary easing policies, but now China has really entered the mix. Add that to the fact that Fed Chairman Ben Bernanke will be speaking or reporting to the Congress, and this will be on Tuesday of next week. You have the mix or the necessary components for a nice little rally. We've seen silver and gold trade double-digit higher throughout the evening session last night, as well as into today, into New York. And you can see that really for the first time right in this area over the last couple of hours, we've gotten any kind of easing. Let me go ahead and blow that up. But any kind of easing, as you can see, that we have definitely seen the size of these candles really shrink over the last 3 hours of trading. Traders, we are looking at a short-term, a 2-hour Heikin Ashi Japanese average chart on the dollar index. And the reason for pulling this up is, as you can see, it does appear, at least on a tentative basis, that we have seen the beginnings of some sort of resistance in the dollar and a potential lowering of prices throughout next week. We are looking at a weekly chart, straight candlestick format, what I like to basically term the big picture. And the big picture, of course, takes us from the beginning of the Super Bowl cycle up to the new record top, and then, of course, following this most recent decline. Here's what I'm finding interesting when I look at the chart. Besides a couple of points in which the market would test a certain area, come down, retrace, and then move back up, you can see that we had this type of activity. We would hit a top, we would get a decent correction, but then the market would, of course, move back towards that upward momentum. We had a triple top right in this area. This was around 1350 in terms of price. And you can see a little bit of resistance in this area. And that's right before the market, of course, shoots parabolic. What we have been witnessing, though, really since the beginning of this correction, and of course we hit this top September of last year, but for the first time in really 4 or 5 years of trading, we're getting a different type of price movement. And what I mean by that is we certainly are getting a protracted or prolonged correction. We are getting a series of lower highs, and that certainly doesn't beckon well for the bulls. That's a very bearish statement. On the bullish side, we've been able to maintain or hold this, call it 1530 area, and you can see different points in which we have tested it, and we had a lot of testing over the last couple of months. But it seems as though this particular price point is a point in which buyers re-enter the market, whether it's buying the dip mentality or bargain hunting. We see a resurfacing of buying come in as it hits this lower area 1530. I've gone ahead and blown the chart up because the other thing that is quite apparent to me when we look at this data is, although we've had really strong support in this area, at the same time what we're seeing is alternating candle color. If you take a look at the most recent activity in the gold market, you go red, green, red, green, red, green, red, and we are looking as though we're going to finish this week with a positive close on the week, and that's why you have this small-bodied candle, but it is green nonetheless. You can also see it in different periods of this correction in which you got really consolidation or a price that really needed to form a base before it moved one way or the other. That tells me that the market is attempting, at least attempting, to form some kind of base. Whether or not it will be able to is something that only time will tell. But I can tell you that it does appear, at least on a tentative basis, as I look at the market now, that one, this area of support, 1530, will probably hold. It's been tested on numerous occasions and has had the ability to be pretty resilient. The second thing that we can see is that we do have a defined sequence in which we're getting lower highs. That certainly is a bearish statement on a technical basis. So the question is, at what point will this market break? I do believe that when it does break, whether it be up or down, it's going to break fairly hard, because whenever you have this type of formation, the triangle formation, it's a compression correction, meaning energy is building as the prices themselves compress, and we have seen absolutely compression in this marketplace. Lastly, in terms of looking at our weekly gold chart, I have put up a straight candlestick chart, and I have the exponential moving average on the top. That's this white line right in here, as well as the MACD. Reason for putting this chart up is that really for the first time since this correction, when we consider you got your real cross right in here, the market crossed again here to the downside, but look at how much the market currently is oversold. Although it is oversold, when we look at our exponential moving average, that is still sitting a little bit higher than current market prices are trading. Currently 1588, it really would need to break above 1600. 1615 would be the point that it would cross the exponential moving average, and 1600 and 1640 are absolutely critical areas that we need to see for technical confirmation that this correction is over. As of yet, we've got very, very strong support, 1530, 1560 in that area, At the same time, we've got really, really strong resistance at around 1640. So we're going to have to see which way this plays out. My belief is it will be to the upside. So where does that put us on our current Elliott wave count? Well, I can tell you, the Elliott wave count has been difficult in this corrective period, to say the least. But I can tell you this much, this is my most current belief. No doubt, we are still within this major fourth wave. This is the end of 3 at the historical high, 1920. In terms of the particular count itself, to me, what is really important is that we are back into what I believe is that compression correction. If that is the case, and if in fact, because we've tested these lows on so many occasions, if that is the case, what I would be looking at would be a series of 5 legs. This being 1, this being 2, 3. Once 3 concludes, we would take one more stab at the upside resistance, and this is according to straight Elliott wave principle, of course. We would have a 5th leg, and then what's simply called a thrust. And what defines a thrust, of course, is the fact that it finally breaks out above the resistance area from the compression triangle. Will that be the case? Well, only time will tell, and we have also seen it really break below any kind of an area that really genuinely broke or deviated, I should say, from this incredibly long support line beginning in, of course, the end of 2008. And you can see we followed it very, very closely. There wasn't too much deviation on the downside. Of course, it broke out of the channel on the upside. When we consider that the channel itself was something like this, you can see this huge point in which we broke well above that. But you can also see this point in which we broke well below it. We've not been able to get above this line yet. I still believe there is a pretty respectable probability that we continue to maintain this major fourth wave, and we are coming closer and closer to the conclusion of it. Of course, we need some sort of technical evidence, but as long as it can maintain any kind of adequate support, we'll have to see how it reacts if and when gold trades towards its resistance area. And of course, that is around 1630 to 1640. Lastly, we are looking at the silver market, extremely resilient and extremely profitable this week for us. We have been in a long position, and that long position has gone well into the money. As you can see, we had a dip in the market which took us almost to 26. We were looking at support as just around 26, currently trading off of the highs, but 27.28. And you can see on the Heikin Ashi, for the first time, we've actually gone red on the 4-hour Heikin Ashi chart. However, when we look at the MACD, you can see that although it's gone back and forth, it is once again crossed to the upside. And more importantly, you can see the lines moving apart, and that's strong in terms of trend itself within the silver market. I wouldn't be surprised to see it give back or see a small correction in this area, but silver has certainly been a marketplace and a metal that traders have been focusing on over this last week. This has been Gary Wagner, wishing you as always good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.